always be open to partnering. Never be greedy in this space. You have to be open to partnering and building a relationship. Now, that doesn't mean get paid your fair share, nor, make sure you are getting paid what you're worth. However, always be open to partnering because there's so many deals out there and so much you can do together.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another episode of Weiss Advice. I am your host, as always, Yonah Weiss. Grateful and excited to be here today with another amazing guest. We got Chris Salerno, all the way from Charlotte, North Carolina. What is going on, my friend?
How are you? It's been a while since we've chatted. I always love chatting with you.
It has been. This podcast, by the way, is a long time coming. For some reason, I don't know why I haven't had you earlier, because we were hanging out long before I even started this podcast. So it has been a long time coming.
I knew you right when I got on the space in 2019.
Yeah.
So way back when, the good old days, they called it.
Those were the good days. Now I don't know what kind of days we're in right now, but I mean, you're a young guy. You are someone who's taken a lot of initiative. One of the things that drew me to you originally when we first met was just here's this young kid who's just so much ambition, so much drive, and just jumping in. I remember, partnering on your first deal there. I still remember a lot of details about that deal, but I'm just curious to hear from you kind of how you got started in real estate, where, what your background was, and, what you're up to now.
Yeah, so it's been a while. I've been in real estate for about 9.5 to 10 years. I've lived in Charlotte for 16 years. I have a wonderful son who's 3.5 years old. He'll be 4 in December. If you follow me on social media, especially Instagram, Chris_Salerno_, you will see he is my world. I love that little man. We always have the best times. But I've lived here in Charlotte for 16 years. And about 9.5, 10 years ago, I got into the residential real estate industry. At the time, I wanted an income that followed my work ethic. Because I will outwork anybody, and I treat it like the Hunger Games. That's the real world. It's business, and thankfully I've been able to gain some success in the real estate industry. But I ended up creating a company doing around $40 million in annual sales my first year of brokeraging, strictly brokeraging, no investments. After that, I worked with a handful of investors. Thankfully, I locked up with a woman who was flipping homes, and she bought anywhere from 3 to 5 from me per month. So she really helped boost my career. So hats off to her. But I got some sight of flipping houses, investing. Other than that, I was laser focused in brokerage and growing that company. I then sold it, and in that sale to the merger of the number one team in the Carolinas, I fell into their operational roles, or COO. That was in the agreement when I sold the company to them. And I brought them from 92 million to 147 million in annual sales just in about a year and a half. Throughout that time, I had 4 single-family properties. 3 were fix and flips, and 1 was a single-family rental. Very quickly, with that single-family rental that I had, she missed her payment, or she said she's going to be a little late. And so I had to come out of my pocket to make the payments. And I'm scratching my head, well, what happens if she just tells me she doesn't want to pay it all? I got to come out of my pocket. I said, okay, well, Chris, what happens if the HVAC unit goes out? Plumbing, any issues like that? Well, I got to come out of my pocket. And I'm thinking, well, I started calculating even more. And I said, wow, I can easily go into the red with any large major issue that arises. Yeah. And I said, this is not suitable for me. So I ended up selling all. And then I was still operating that company. And then Uncle Sam sends me, IRS, gotta love him, sends me a letter in the mail saying you're back on your taxes. So I scratched my head and called my CPA up. And I said, what do you mean I'm back on my taxes? And she says, well, let me see it. Oh, well, you're in a different income bracket. You have to make quarterly estimated payments to Uncle Sam. I said, well, that would have been nice if you would have told me that earlier. So I found a new CPA that was more real estate, heavy.
Not just real estate, probably more communicative.
I know, right? She could have at least prepared me for it. That's why I said those questions you're going to ask me, don't tell me. I'm used to it now. I'm used to it.
Whatever
bad
comes
emails,
at you.
Bad text messages. Hey, I'm used to it. So when I realized that, I then got a new CPA, and the CPA said, okay, well, you need deductions. And I said, okay. And they didn't give me your expertise that you give everyone, Yonah. They said, go buy a car, go do this, go do that. And I'm thinking in my head, well, I want to have my money grow. I don't want to go into an asset that's going to depreciate and not give me income or build me wealth. So then what led me to creating QC Capital at the beginning of 2019 was the tax benefits, the cost segregation at that time, 100% of bonus depreciation. And so that's what led me to create QC at 2019. And then from there, we scaled up very quickly. I have multiple properties in our portfolio and love JVing with other groups and then operating our own deals. It's fun.
Yeah, that's awesome. And I think, being that top performer that you were and are really, but back in the day when it's true. I think I remember we were having a conversation back in Charlotte when I visited. I think it could be back in 2019 or 2020, before COVID, probably 2019. And it was just like you had this mindset of, I'm just going to go out there and hustle and do everything in terms of marketing, right? That was like a big thing. I'm going to do and put out there in social media and get out there. And that's what you did. And that's what people need to do in order to grow. You need to be seen, right? And so you need to go out there.
You have to get out there. You have to push yourself. I mean, I've watched so many videos about Elon Musk. There's been times Elon Musk only had 2 weeks worth of payroll and expenses for SpaceX. And Christmas Eve, he signs a contract with NASA. So, it comes down to taking those type of risk at the end of the day and being able to handle those type of risk to grow a very large company and to help all the other people grow their wealth as well. And marketing's huge. As you know, you run a phenomenal podcast. I have to hand it off to our head of investor relations. I keep him busy. Last month, we had over 728 new investors into our database. Wow. Brand new investors just last month alone. We anticipate to hit that 800 mark. My goal is to hit 1,000 in 1 month by the end of this year.
That's awesome.
But he's staying busy, and it's all because of the right marketing, helping educate people on what we're doing, just like you.
Yeah, now you got to find the right assets.
I just had a seller call today, so I should hear back before Friday if we get awarded the deal. Plus, we're also in the car wash industry as well, so doing a little diversification for our investing partners.
That's awesome. Tell me a little bit about that, because I know you've primarily been, since the onset of QC Capital, been primarily in multifamily.
Yeah.
From C class, B class, A class, even, right? A lot of different things are going on there. But I know recently, and we discussed this, that you're doing car wash investing. So tell me how that came about, what that's about. And, I'm very curious about that asset class.
We're super excited about it. We are looking to develop car washes here in Charlotte, North Carolina. Ours is very unique, where we don't need an on-site personnel. It is technology ran. And with these type of washes, we are able to offer 2 different type of services to our customers, a soft touch and a touchless, which all your express bays with the conveyor belt that you may see, those only have one type. And you have the brushes, going up against your car. A lot of people don't like it because it scratches it, can damage it. Some people don't care. So we're able to offer 2 different types, where one type is just pressure washing. Nothing's going to be touching your car except high pressure wash water. And then the other type is that soft touch with the brushes. So we're able to offer 2. But we are finding that it is a very unique market, especially here in Charlotte, a very mom and pop driven market, around 90 to 92% mom and pop. So we're coming in through an institutional mindset. On top of all that, thankfully, we've had success with marketing with QC, and that's what we're going to do. We're going to market very, very heavily, strategically, to get larger subscriptions, which we're finding none of our competitors, which they're not necessarily competitors because no one's doing this type of wash at a mass scale, but none of the other type of washes, what we are doing and planning on doing when it comes to the marketing side.
It's fascinating to me. I think that, car washes in general, it's something that people, even if like inflation, the economy, things are tough, people are still going to go get their car washed. Like, it's fascinating to me. I can't really relate to it personally.
Well, it's feelings and a psychological thing, and it's a representation. If you show up in a clean car, you are represented as you are well put together. You take care of your things that you own. Plus, it feels good. It feels great when I have a clean car and my son and I are going to hop in the car to, go on a little road trip to Asheville or to the local zoo. Having a nice clean car, it feels good. And it's hard to take that out. Statistics show 77% of Americans get their car washed on a monthly basis, and at least one American will get their car washed on an annual basis.
Wow. So everyone's getting it done regardless.
Everyone. Yep. Everyone. Yep.
That's pretty incredible. So, I mean, it sounds like a great asset class, something that is hedging inflation. But what you're doing is, like you said, a little bit unique that you are developing these really kind of technology based car washes where you don't need anyone on site. People are, kind of just driving up, they got their subscription or whatever it is and
Yep.
roll in and roll out.
That's it. And, a lot of people, some people don't want to deal with people or people interaction. They just want to be by themselves. Other people, they don't mind people interaction. But what's unique about ours is that from raw land to washing our first car, it takes us less than 3 months. And I knew you were going to say that. I had a call this morning with a developer out of New Jersey, and we were talking multifamily. I was telling him we're diversifying in the car wash industry. He's like, "Oh, well, do you know ICS?" And I said, "Yes, that's our payment processing system that we're using." He said, "Well, I just developed 3 car washes here in New Jersey for the owner and who owns ICS." I said, "Very cool." I said, quick question. How long did it take you to develop those? He said, one of them about 8 to 9 months. I said, it takes me less than 3. And he said, how? The reason why is because ours are pre-manufactured in a warehouse, which they're manufactured to the specs to make sure we can still take our bonus depreciation and our cost segregation on here. It still applies by the IRS rule. I don't know the exact number, but you know the number. It still will apply for that rule, so we can still take our bonus depreciation and cost seg. However, it's all pre-manufactured in a warehouse, shipped to the site within a week and a half. Our contractors can put it up within a week, and all done. Now, the other stuff takes a lot longer, which is grading, putting, underground plumbing, things like that, electrical
Right.
work.
Right. But I mean, even like the raw land, I mean, entitlement process usually takes a lot longer than that, no?
Yeah, so all of our properties are already zoned car washes.
Oh, wow.
I will not go and look at a property if it is not zoned, because in the state, in Mecklenburg County, it will take anywhere from 12 to 18 months.
Right.
Depending on the other counties, it can take anywhere from 6 to 12 months. So we are automatically going in with sites that are already zoned, and all we're doing is submitting approval of our physical structure, which it's already zoned. So it's a 99% chance they'll come back with questions. We'll submit it again, but it's a 99% chance they'll automatically approve it. And then we can start very quickly. So that's how we're cutting down our time extremely fast, because we're already seeking sites that are already approved.
That's pretty awesome. And you're still, like you said, running the multifamily business simultaneously, right?
100%. We are still heavily bullish on the multifamily market. I think now is the time to purchase because those interest rates are higher. We're seeing those cap rates higher. I anticipate Feds to raise interest rates in Q4 again. I think they're going to pause it in Q1 and slowly decrease in Q2 to Q3 of next year. And so now's the best time to buy, because you're buying at higher interest rates, which are higher cap rates. Ride the wave, so when it starts to tailor back down, you can then sell.
Interesting. You just gotta find the properties, right? Because no one wants to sell.
Oh, no. I mean, the property we're investing final in, and knock on wood, hopefully we get awarded it this week. It was under contract for 4 months ago for around 30 to 31 million, because they were trying to do a tax abatement that the Texas was going to allow, but then they denied it. So the property fell out, and now we are at 26. But they have to sell. It's a larger REIT that has 18 to 19 billion assets under management, and they have to sell. So we are, hopefully we'll be taking it from them.
Right. But I mean, obviously you're going to find opportunities like that. That's amazing that you find that. Hopefully it goes through, and that sounds like a great asset. But generally, from what I've found, I mean, the acquisitions, the market has been extremely slow simply because people don't want to sell. Like most people, obviously there are exceptions. You're finding this deal. There are people that do need to sell for it. But generally speaking, I'd say, 90% of sellers are just like waiting for something. I don't know what.
I think they're waiting for interest rates to start decreasing, and I think that's going to spark up a lot more buyers out there and a lot more individuals that have liquidity once those interest rates start to decrease, which are going to taper down the cap rates. And I think that's when they're going to start selling. But you're seeing a lot of refinances now. A lot of people are just refinancing, trying to get out of their floating rate debt, and trying to get out of that, and refinancing, and bringing some money to the table to refinance, which is common still, to just make sure that they can hold the property a little longer than anticipated.
Yeah, I actually just had a call this afternoon with someone in that specific situation, trying to bring on new investors so that they can refinance. It's hard to deal with a situation where you're dealing with floating, debt, and coupled with the fact that, the past couple of years, there was a huge increase of costs in terms of construction and all that. So, even though had you budgeted properly, you might have been stuck with, much more costs, and you're dealing with a basis that you can't actually handle and get returns on. So much, much harder.
Oh, it's very hard. And no one anticipated this type of rate increase. And no one anticipated that, you're buying properties a year and a half ago. And if you underwrite the property today, you're half of your value of what you bought it for. And that's not meaning that individual or that company is a bad operator. No one anticipated those interest rates to spike like that. So, the best thing to do is to make sure to refinance into some fixed rate, make the property cash flow, bring some money to the table so you can do so, and, hold the property for longer than you anticipated, and then sell down the road. No matter what, that property is going to appreciate if it's 5 or 7 years down the road.
Right.
It's just you're going to have to, wait a little longer to get your capital back.
Hold a little longer. Exactly. I mean, sometimes business plans change. Obviously, you have investors, you kind of underwrite certain things and hope to get their money back in, 3 to 5 years. Sometimes things change. And hopefully that was communicated as transparent at the onset of that investment. It's not always the case, but hopefully that's the right way to do it.
Very much so. I think a lot of people got spoiled back in 2017 to 2020 where, they were doubling their money in a year or a year and a half. And it's at the end of the day, and I tell investors this all the time, we're playing the game Monopoly and it takes time. Even though it sounds good, a year and a half, that's their track record. Don't anticipate that. Anticipate longer holds. Real estate has always been a long-term play. We were just in a certain market environment that was able to get out very quickly. However, real estate's been a long-term play. It always has been ever since, 1900. So, if the property has to refinance and hold for another 5 to 7 years, I understand certain investors will get upset, but at the end of the day, that is real estate. Real estate is a long-term play. It's a long-term hold type of investment vehicle.
Yeah, absolutely. Now, Chris, are you still involved at all with the brokerage side, or did you completely leave that?
Completely done. Let all that go in 2019.
Awesome. Okay. So put all your eggs in one basket.
That is because I know when my back's against the wall, I work the best.
And you do. I mean, you've proven it. What are you doing now, I'd say, like differently in the current environment? Obviously, we talked about the car washes. We talked about, but in terms of the multifamily, which you've been operating for the past several years, how are you running that business differently now than you did, let's say, when you started out?
Yeah, definitely, especially in this current market environment, we are not pushing rents astronomically. When we are looking at deals, for example, the deal that we're currently looking at, we're looking at, okay, how much is the rent increase? All we have to do is to get a $40 rent increase. Okay, that's not bad. We're not having to get $300-$400 rent increases, which is unrealistic in this market environment. I've talked to other operators, other property managers, and right now we're seeing stagnant to negative rents in certain markets. But, I have not heard of an operator pushing rents $300 in a market right now. So we're watching very closely. What is that actual number on top of where the base rents are already at that we have to achieve? Is it $50? Is it $30? Is it $200? Okay, that's unrealistic. There's no way we're going to be able to get that with the current market environment. Is it $50? $50 is not bad. That's okay. So we analyze that very closely because I think it's super important. On top of that, look what is happening with taxes and insurance. That right there is really crushing a lot of people, right, is taxes and insurance. Thankfully, we have a very strong tax attorney that has appealed our properties and has saved us a lot of money. So my hat's off to him. But if you don't have one, find one, because that is super important to have someone in your corner to appeal those. Because of the current market environment, he took all of our financials and said, hey, look, the property's not producing as what it would have, or that you guys think it is, because of the current market environment, lower their taxes. And we've actually gotten taxes lower because we've shown they think we're making X amount of dollars, which is not true.
Mm-hmm. Yeah, that's very interesting. I haven't gone down that path in the property tax. You would think that I would be so closely rated. And people get confused all the time. They think I help people save property owners' taxes. They think, oh, it's property tax. No, it's actually income tax, cost. But that's fascinating. That whole area, it's a huge bill, especially I know you're buying in Texas. Huge. I mean, it's just ridiculous.
Huge. We had one property that, they assessed us over what we even purchased it for. And so we had to bring all of our financials, our attorney did, and presented it to them like, look, one, they're not even producing the amount of income that you guys think they are producing. So there's no way at all they are going to be able to take care of this tax bill. And we were actually able to get them to substantially drop it. But taxes and insurance is another very large thing that you're seeing in some cities going up over 50%. And if you're not underwriting properly, that can really hurt you. So those are the big three things right now is the debt side of things. Where's debt coming in at? Or four now. Where's debt coming in at? Where do we think we're going to get debt? It's always going to be 50 to 55%, maybe 60% in this current market environment. Where are our rent increases? How much are they? Is that achievable in that current market environment?
Right.
And then the taxes and insurance. So those are the main four things we're honing into. And we've passed on a lot of properties. And a story here, you may know Myrtle Beach, South Carolina, very hot market. Ever since after COVID, a lot of New Yorkers and people from up north came down because it was open and they fell in love with it and started buying homes. So it really boosted the population growth and the growth overall upwards of 22, 23%. We submitted a bid on a build to rent community, or they wanted 320. And I'm good friends with the broker. So I submitted a bid at 270. And he calls me up and I said, please don't tell me I'm in best and final. And he says, well, you are. And I said, what are you talking about? I just submitted it, but we're far off from their asking. And they're like, yeah, but this is where all the other bids are. And I'm like, well, I'm going to rescind our bid because it's probably at like 250 right now.
Right.
But it goes to show you, and I'm seeing it. I got an email the other day. Go ahead and it said submit an offer, offers due. And it even said in the email, no matter what is your offer, please submit it. Sellers will look at all offers. So that tells you right there that, it is a market really for the buyers. It's a buyer's market and sellers are needing to sell and, stand your foot strong and go back to your hard metrics and criteria and, don't budge.
It's a great time to raise capital. Great time to have that capital to invest. And are you doing it speaking of that, in a fund structure of sorts? So you're able to raise that capital and then deploy it once you have the properties?
Yes, that is correct. So we are doing it in a fund, and each fund will only purchase that one property, but we do that so we can always raise capital and put capital into the properties.
That's awesome. Wow. What would be, and just kind of as we're winding down here, I'd love to hear some advice for young people, because like I said, you started out really young. You're still really young, in my opinion. But, starting out very early on in your career, what were some of the things that kind of drove you and pushed you to become better and become greater at what you do?
I think, I'm always fueled with competition, even though that can be a double-edged sword. There's a lot of individuals in our space that have a tremendous amount of success, and my hat's off to them. They're wonderful mentors, coaches out there that have a tremendous amount of success. But I'm always hard on myself. I'm very, very hard on myself. And I look at them and, think, why are we not there? And then I have to sometimes look back and say, well, they're in their early 40s and they've been doing this for 20 years. And so, I would say, really watching those individuals very closely and what they're doing, analyzing their companies, what they're putting out there, how they're raising capital, what deals they are buying, why they are buying them, has helped me tremendously really analyze and make tweaks on our company and help grow our company by seeing, what is everyone else doing and getting a good sense of it, and then making and formulating my own opinion and decisions, and then growing.
Yeah, because when you're starting out, you need to have mentors. You need to have people who
100%.
who have been in the business longer. And I know you went down that path and had some of your first deals with other people, partnering with them, and really learning the business and figuring out what works, what doesn't work for you, because everyone's going to take a different path eventually.
100%. And I think this business too, it's all about partnership. Look at the Hornets just traded $3 billion. Michael Jordan just sold them. The private equity company, I know the private equity company that just bought them, the private equity that bought them, they have so many partners in there that are syndicating that deal. So it's like, always be open to partnering, never be greedy in this space. You have to be open to partnering and building a relationship. Now, that doesn't mean get paid your fair share, nor, make sure you are getting paid what you're worth. However, always be open to partnering, because there's so many deals out there and so much you can do together.
You can scale so much faster also by just
100%
partnering with other people. trying to figure it out all your own. I mean, that itself is a double-edged sword as well. I mean, have you ever had some deals that you've done some partnerships with that have just not turned out, without getting into too many details, have not turned out the best?
Very much so. Yeah, there's individuals that I don't partner with anymore from first round of experiences that I don't partner with anymore. And, frankly, I don't plan to partner with anymore. And I'm not saying that those individuals are bad individuals. They're great individuals. They're doing great things in the space, but it's just like a marriage. It's just like a relationship. You have a beautiful relationship. You have a beautiful family, Yona. It's just like a relationship. You're getting into a dating relationship, and sometimes your significant other, you just may not have a connection with, or you may not flow easily. You may not see eye to eye. And that doesn't mean you should just stay in the relationship. Obviously, if you have a deal present, yes, you need to stay in the relationship because your babies are your investors. So you need to make sure they're well taken care of. But once you exit that deal and everything is dissolved, then you have to break off that relationship and say, I wish you the best. I'll run into you here or there and keep wishing you much success, but we're going to go on our own ways. And I think that's what adults, a lot of adults and mature adults need to see business as, is that, business partners are relationships, and sometimes things don't always work out.
Yeah. And it gives you more opportunities oftentimes, because you learn the hard way. Like you said, to the partners, like, go through that, because even if it doesn't work out, you'll learn so much from what to do next time.
100%, and what not to do.
Exactly.
Yeah.
Absolutely. Well, Chris, I want to wind down here to what we call the final four. These are 4 questions I ask all my guests. And usually I tell my guests what the questions are beforehand, just so they're not surprised or stumped. I've stumped some people, and so that's what I'm afraid of. But these are easy questions. Take them any which way you want. And the first one for you is, what's the worst job that you ever had?
Ooh, the worst job I've ever had. Honestly, I wouldn't say any of my jobs were worse. The reason why is because they all taught me a very valuable lesson. And I always try to seek the positive out of any negative situation. And all those jobs have taught me a very valuable lesson to help me, think the way I'm thinking today, essentially. So I wouldn't say any job was worse. If I had to pick my lowest one on the totem pole, I would say probably when I was washing dishes when I was 12 years old. I was getting paid under the table because I wanted to work, but it was only like $20 a night. And to me at that time, I was like, well, it's $20 I didn't have, but I think I should be getting paid a lot more for 4 to 5 hours worth of work. But, I did it to get out, start working. And that's where really my work ethic started growing from.
That's amazing. And it's so interesting that washing dishes has been a common answer recently on the Weiss Advice podcast.
I do not do it anymore. I have a maid that comes once a week, and she does it. So it's like, thank you.
Yeah, no, I don't envy either. But it's a second question, which very much different question, but what's a book you've read that's given you a paradigm shift? So I'm looking for anything that's kind of helped you. Oh, Think and Grow Rich. Right off the cuff.
I will. Yeah, that is a book I recommend everyone reading at least once a quarter. It's a really good book. Think and Grow Rich. Also, The 4 Agreements is another great book, but Think and Grow Rich is definitely the go-to.
Awesome. Because essentially, it's something that's really just teaching you how to function, how to think, and how to manifest your reality.
Yeah. Mindset is everything.
100%. And it can apply to all areas of life. I mean, the thing about Think and Grow Rich is that you can apply that to anything you want to do, not just business, not just money, anything.
No, your life in general. I mean, I was walking down New York City one day, and I had a business partner with me, and we walked past this woman, and her energy made me stop. And I went and spoke to her because I said, you just have phenomenal energy. You walk past and you just felt how positive her energy was. And I strongly believed it was her mindset. She walked past having very strong energy in a positive manner. And if you walk into a room, you can feel that energy of who walks in there and how they are. And it is all done from their mindset. If they're having a bad day, they're going to be more down. If they're more, uplifting, they're going to be more positive. It's going to be a lot easier.
Amazing. Third question, Chris, what's a skill or talent that you would like to learn?
Ooh, a skill or talent I would like to learn. That's a very good one. I've been thinking about it, and I would say it's a skill or it is talent, I think, is boxing. I think I want to take up boxing, and you have to have the right form and, things like that. So I think that's something I want to take up. Also, for exercising is boxing. I used to wrestle when I was younger, did some MMA, but I think I want to take up boxing.
Very interesting. You got to have a lot of resilience. Don't mind
Yep.
getting hit in the head.
You got to be able to move quickly.
Float like a butterfly, sting like a bee. There you
That's
go.
right. I
Um,
love it.
Fourth and final question: what does success mean to you?
Success means to me is leaving a legacy for my son. And in my eyes, that means building $1 billion business for him, a multi-billion-dollar business, if he wants to take it, if he doesn't. But I think a lot of people will, say families first, family first. But don't get me wrong, family is first. I definitely understand. However, I also think it's important to realize, how do you feed your family? How do you take care of your family? How do you put a roof over their head? And you do that with work. That's the only way you can do that, is by working and focusing on your craft to build an abundance of freedom, of money,
Mhm.
to create that freedom so you can then spend more time with your family. And so that's how I see success: is I need to make sure I can work to then create the freedom and the wealth that gives me that freedom to then spend time with my son. And now, I mean, I'm always laser focused, as you said, in work and everything I do. But now, because he's so young, I know he's not going to truly remember these times. So I am work, 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 work. So when he starts to get to those times that he's going to remember everything for long term, that's when we can travel. That's when we can go and do things that he's going to be like, wow, dad did this and we had a blast doing this. So that's why, like, these younger years of his life, I am really pushing heavily.
Well, good for you. Keep it going. And it really been insightful. Great to catch up as always. Where can our listeners find you or reach out to you if they want to?
Yeah, so the best way to reach out, find us, and I also wrote a book, and we give a free copy. It's a hard copy, it's not an ebook, it's a free copy right in your mail, anywhere around the world. And if you just go to our website, qccapitalgroup.com, you'll see Invest with Us, or go ahead and click here to get a free book. Go ahead and fill out your information. Our head of investor relations, Nick Abraham, will be in touch with you. But we will then go ahead and mail you a free copy of our book, so you can then go ahead and read it. And it's very insightful, less than an hour read, so you're not going to take months to read it. And it's straight to the point, so you can understand the ins and outs about multifamily investing.
Awesome. And what's that book called? What can we expect to get in the mail?
The Multifamily Investor Booklet. So it's the
There you go.
Multifamily Investor Booklet.
Awesome. Awesome. Well, we'll make sure to put that in the show notes at qccapitalgroup.com. And Chris, always a pleasure. I really
Thank you so
appreciate you
much.
taking the time today.
Thank you, Yona.
And to our listeners, thank you guys for listening all the way to the end once again. And remember, the best advice comes only when you ask.